Hello traders and welcome to the Friday Wrap-Up, May 29th, 2015. This is brought to you through FXCL Excellence in Trading. Please visit us at fxclearing.com for your trading solutions. Traders coming to you live from Pattaya, Thailand. Bright blue sunny skies, hot white sandy beaches. Absolutely beautiful day today. Can't wait to get to the gazebo for a cold one. Alright traders, lots of work to do. We have a lot of charts to go over and some data, news data, some commentary. However, let me introduce myself to you. My name is William Gilder. I'm your moderator for the Friday Wrap-Up, which we do every Friday after the New York close. Traders, I started trading in the year of 2006. In 2008, I retired from a wonderful 27-year career in the great state of Florida. 9 days later, came to Thailand to celebrate my 27-year career for 3 months. Well, it's 2015, traders, and I'm still here. Traders, I do trade the markets every single trading day. Don't necessarily take a trade, but I'm in the markets. I'm listening and looking for opportunities and probabilities for the trades to be successful on my side of the trade. Traders, I also enjoy doing these videos, and I love educating and teaching new traders. All right. We got charts to look at and a commentary, but before we do that, let's take a look at the legal stuff, and this is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most of all, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's move over to commentary and let's see what happened at the close. Let's take a look at the U.S. indices. U.S. 30 closed negative 0.64%. The S&P 500 negative 0.63%. The NASDAQ was also negative 0.55%, with the Russell 2000 at negative 0.57%. Let's head over to the Eurozone, where the DAX closed negative 2.26%, the FTSE 100 closed negative 0.80%, and the CAC 40 closed at negative 2.53%, with the Eurostoxx 50 closing at 2.19%. Moving on over to Asia, the Nikkei 225 closed just positive at 0.06%, and the S&P ASX 200 out of Australia closed positive at 1.12%, and the Shanghai closed negative 0.15%, and the Hang Seng closed negative 0.11%, with the Kospi in the green at 0.19%. And that's what's happened with our indices and our numbers at the end of our trading week. Commentary is, I think we had a really great trading week. We did some really nice pit movement. We had some sporadic pairs that decided to jump all over the place, such as like the pound decided to reverse itself and the Euro Aussie. We'll take a look at those daily charts and you'll see what I'm talking about. But on all, I thought it was a very productive week. We go into next week looking at its NFP week. So we have non-farm payrolls on next Friday. Those numbers will come out. Of course, that is the biggest data release of the month. So we'll be hampered with that during the week. Greece is on the top of the board. It's quite, big what's going on with Greece in the Eurozone. So we'll watch that. But all in all, data is good for us. We need data. Data is very important, as data gives us movement in the Forex markets. And we don't care if it's good data or bad data. As long as price goes up and price goes down, we have an opportunity to make profits. All right, traders, let's start. We got a lot of charts to review, so we're going to review the daily charts. Remember, each candle is a daily candle, so remember that as we go through our charts. And as usual, we're going to start with the euro dollar. Take a look at this euro dollar. Really, you can see it was like 2 weeks in the up move, and everybody was saying, oh, the euro's, now bullish. Well, guess what, folks? It came to resistance. If you look left of the chart, drew a line there, a horizontal line, you'd see it's at resistance. And what happened last week? Yes, down she came and has continued to the downside. So the euro dollar still remains bearish. Still remains bearish. So we will keep that as a bias as we go into our next week. Let's look at the dollar Swiss, which should be opposite of the euro dollar. However, we are at the 200 exponential moving average for the last 3 days. It's just been hanging out there. And now we're below the 200 exponential moving average. So we'll just keep an eye on that. I don't trade this as a regular. You can only trade so many pairs, and I watch 8 currency pairs. So a lot of these charts I'm going to show you and I'm going to talk about, they're not necessarily pairs that I trade. When we come across one that I trade, I'll let you know. And of course, yes, I do trade the euro dollar. I do not trade the dollar Swiss. All right, let's take a look at the Great British Pound US dollar, which is a pair I trade. Look at this drop in the last 2 weeks. Traders, this has really come down, and all week this has been very bearish. And I said a while back that this was a change of trend to the upside, and well, you know what? I don't know. We'll see how this reacts come into this week and see how we end up. But if you take a look, we're at resistance right now. Take a look left of the chart. You can see price action of other candles has reacted to this price level. So we're going to see, and we closed with an indecision candle on Friday. So the pound is going to be very interesting to watch as we come into our next week. But however, my bias is going to remain to the bearish side. One, because we've had so many red candles. Not only that, we're below the 200 exponential moving average. And I am aware that there's a good chance that we're going to get an up day or two as a correction as people take profits. All right, let's take a look at the dollar yen. Dollar yen I do not trade. I use as a tool. And if you don't have the dollar index chart on your platform, just use the dollar yen, and it pretty much mimics what the dollar is doing. And you can see the dollar is just very strong, and we'll see that throughout as we look at the next bunch of charts. We've got like 10 more charts to look at. So yeah, want to use the dollar yen as a tool. Like I said, I don't trade this, but I do use it as a tool. And I have a laptop that I keep next to my main trading station with just the dollar index chart on it. And I'll show you that at the end. That'll be the last slide we look at. So let's move over to the euro yen. This currency pair I do trade. I really enjoy trading the euro yen. Quite a crazy week. This pair loves that 200 exponential moving average. We talked about it last week, and it's still there. It came down below it, and for the last 4 days, this is basically last week, has decided to be bullish. Now it's above the 200, so not quite sure. But if you open this chart all the way up, you can see that this is absolutely in a bearish formation. This is a bearish currency pair. So I'm only looking to sell this. I really don't want to buy it. I want to sell it. So that's my bias on there. Let's take a look at the beast, the pound yen. Great currency pair to trade. I do trade this pair. Traders, if you're new to trading and you don't have at least 6 to 8 months of live trading in the currency markets, please do not trade the pound yen. You can get beat up very, very much on that. So please do not trade the pound yen unless you have some experience behind you. It's a very volatile pair, and it can definitely whipsaw you and knock you out of your trades really quickly. So it's bullish, as you can see. It's way above the 200 exponential moving average. It's taking out higher highs and higher lows. Friday ends up as a doji. Thursday ends up as a doji. So we have 2 dojis back to back here, and we'll see what happens. It's at resistance right now, so there's a good chance we might see a little fallback, and this might sell off on Monday and then Tuesday pick back up again. And then by Thursday at London lunch, the markets are going to clam up waiting for NFP on Friday. Here's the Aussie yen. This is another currency pair I do trade. This is in a sideways price action. Again, this is a bearish, bullish pair. It really hasn't made up its mind. I took the pound Aussie off my 8 charts, and I just put the Aussie yen on it this week. So this has been added to my 8 chart selection that I'm going to start trading on a regular basis. I took the pound Aussie off only because of the spread. I don't know why the spread is like crazy. It's like 6 pips and 5 pips. It's really crazy. I don't understand what that's all about. But anyhow, and I like trading the yen pairs. We want to be careful with the yen. I think they're going to make a move here. The yen has hit some really lows on the dollar yen. So we just have to really just keep an eye because the yen has become very weak. So the Aussie, as we know, is weak also. So this is why we're probably seeing this in this range, and we'll probably see it for some time. Let's look at the Aussie dollar, and here's a perfect example of what I'm talking about, how bearish this pair is. This bearish never was bullish. It had a week of up, and then it comes back down for a week, and then it goes sideways for 4 days, and then bam, now it's back down. However, if you take a look at this Aussie dollar, we remain bearish. I only want to sell this pair. I don't want to buy this pair. I just want to sell it. And the reason is because there is, we're coming up on support. And we're coming up on some rigorous support at the 75.10 area, and then we're going to come up to that 7500 area, which is psychological level. And you know there are pending orders sitting there waiting for price to change over. So we don't really want to get involved with that too much, but there's a pretty good chance that we'll get a bounce at that point. But we have some room, and like I said, our bias is to the downside. Only want to sell it. Here's the euro pound. Again, I don't trade this. I use it as a tool. It's a good reference tool to just pop this chart up if you're in one of the pound or the euro pairs, just to see what the euro pound is doing. And like I said, it's just a good pair to trade. A good pair to use as a trading tool, not necessarily trade. It's pretty much it's a pretty ugly chart, to be honest with you. If you take a look to the left, you can see that there's a lot of candlesticks, a lot of support and resistance levels, a lot of decision and indecision candles. It's really in a mess right at the moment. So even if I was trading it, I wouldn't want to be trading this daily chart, that's for sure. But it looks like it's now in a bullish move. It's got 3 higher lows and higher highs for the last 3 days. So we'll see how that looks on Monday. New Zealand dollar, I absolutely love the New Zealand dollar, and I trade this on a regular basis. It is extremely bearish. It broke support on Friday and just continued down and took out some major levels. So we are very bearish on the New Zealand dollar. And I'm not quite sure that this is from the New Zealand side. I think this is the dollar strength side and the weakness of the New Zealand. The Kiwi is talking about possibly raising its interest rates at its next meeting. So that comes into play a little bit. And as you know, if you increase your interest rates, you lower the value of your currency. So that was announced last week that they're looking at possibly in their next meeting to increase their interest rates. So we'll keep an eye on that as we move along. Here's a dollar CAD, the Kiwi. The loonie, and it's coming up on a resistance level here, and you can see Wednesday, Thursday, Friday, all indecision candles. This pair is in an uptrend, and it's dollar strength, and it's definitely in an uptrend. Came back down there for a while. It was a correction. If you take this chart all the way out and you did a fib with a swing, you can see it. The issue with the dollar CAD is it goes in a range a lot. Now, this is a daily chart, so these are a lot of pips. One candle can be 50 or 60 pips, or 100 pips or 80 pips. So you just realize what we're looking at. We're looking at a daily chart. So we're looking at an overall picture. And the overall picture is that this is in a range, and now it's up against key resistance, and it's reacted to this price level. If you look left of the chart, or the reaction at this price level, and now we've reacted for the last 3 days. So really, if you're trading the dollar CAD, I'd stay on the sidelines and wait to see what happens until like Tuesday, and see if this breaks this or this continues to the downside. This is a pound Aussie. I really enjoy trading this pair because when this pair gets in a trending mode, it works really well, and you can see it's bullish. It looks like it's broke that. If you look all the way left to the chart, like the third candle over that spike there, looks like it broke that price level to the upside. Friday was a red day, and I'm sure that was due to position squaring and people taking profits. As all week, you can see this just kept giving us higher highs and higher lows. A couple of indecision days, but basically, this was an up week for the pound Aussie, and a great pair to trade. And it moves some good pips. This pair moves like 140 pips a day, so it does move some pippage, that's for sure. Here's a Euro Aussie. It's a currency pair that I do trade. This is stuck here at this 200 exponential moving average. However, it broke it on Friday. It absolutely broke it, as you can see, which doesn't surprise me. But the pair is bearish. This pair is bearish. So it's going to be interesting to see what happens on Tuesday again. I don't count Monday too much. Monday's like the correction day, right? Like everybody's getting back in line to see what's going on. But I do enjoy trading the Euro Aussie. It's a fun pair to trade. It moves a good amount of pips. This pair moves about 130 pips a day on the average on a 4-week basis. So this is a really nice currency pair to trade. And it is, it's above the 200 exponential moving average. And you definitely have to respect that as you look left of the chart. That price reacts to the 200 exponential moving average. So this might be heading for the upside for a little bit. We'll see because the Aussie is very weak. So we'll see how that works. It's going to be pretty interesting because the last couple of days the euro came back down, right? So the euro became weak. So we might end up seeing us in a range. Well, we'll see how that works. All right, like I said in the beginning, we were going to talk about the U.S. dollar. This is dollar index chart. This is U.S. dollar. This is basically showing the strength of the U.S. dollar. Remember, this is a daily chart, so this is over 2 weeks of up move on the dollar strength. The big thing about this pair is that realize that I don't think the dollar is getting stronger. I think that the dollar is just maintaining its strength. I know it's in an uptrend and we're seeing higher highs and higher lows, and you're saying, well, William, it is getting stronger. It keeps moving up. But it hasn't taken out these key levels. If you look left of the chart, it hasn't taken out these highs over there, for a long time, for months. So it hasn't taken out these levels, and it's working its way up. And I think the big thing is we're waiting for the FOMC to make a statement of what they're going to do about these interest rates. People are saying they want them to raise interest rates in June, which we know is not going to happen. Now they're talking about September. And I heard yesterday on one of the financial channels, which is not the people you should be listening to, that, it's looking like November. But they do plan on raising, they think the Fed is going to raise interest rates absolutely before the end of the year. So we're expecting that. And, if you think about it, Draghi did the same thing. ECB President Draghi did the same thing. He talked about starting quantitative easing. Well, he started talking about that, close to 3 months before he actually did it. So it didn't impact the market. Well, of course, the day that it happened, of course, it impacted the market. So I think what they're doing with the dollar and the FOMC, and the Feds are doing the same thing. They're putting this out so the market prices in that they're going to raise interest rates, and I don't think it's going to work. When they raise interest rates, the market's going to respond. Whether negative or positively, the market's going to respond. All right, traders, that wraps up our daily charts for this week. Hope you enjoyed that. A little bit of price action talk. Traders, if you would remember, this is brought to you through FXCL Excellence in Trading. Again, please visit our website at fxclearing.com. Traders, on behalf of myself, William Gilday, and of course FXCL, I wish you a great weekend with friends, loved ones, and guests. Just relax, kick back, enjoy, do some Forex homework, and get ready for a new trading week at the next Asia session. Looking forward to seeing you in the market opening preview series, which is brought to you every single trading day before the market open. Traders, have a great weekend, and we'll see you next time. Take care now. Bye-bye.